Alright, Alpha fam, let's do a quick market update. Before we begin, I do want to say that nothing in these videos are financial advice. Everything is for educational purposes only. This is just my own analysis on the market. Also, if you're new to this channel, if you could please like, comment, and subscribe, we really do appreciate all of the support. So let's get into the market, guys. So I know we didn't get to do a market update yesterday. I was dealing with a little bit of weather issues where I live. But I want to kind of go over a couple of things with you guys right now because, one, obviously, we've gotten some good news over the last few days. All right, that's taken a little bit of the fun away. I am a little surprised at how I guess the best word to call it would be heavy the market has continued to be, even with that being removed. All right, I am still in the camp that we are gearing up for a very good 2026. I just think that we're going through a small bit of adjustment because we also have to realize too, guys, next week, the 28th, is the FOMC. We tend to de-risk into those events, all right? So because we tend to de-risk into them, this is where we could potentially see that we might want to come back down and retest one of these lower levels, all right, guys? Because my frame of thought was the other day when we got that bullish news, I thought we would send a little bit further and a little bit faster and a little bit higher. I thought we would have reclaimed or at least come back up to the 50-day right here, guys. And then if we were to come into it, let's say we barely popped over it and then we de-risked into the FOMC, my frame of thought was, well, that we would just probably come back down and retest these bottom lows. So we would come back down, bounce, and then after the FOMC, start to move up as long as, Powell doesn't come out hawkish and, have some sense of direction of where things are going to be going. And even just a hint of dovishness, the market would full send. Obviously, we're not banking on rate cuts, guys. We obviously, Polymarket is just a placement where people's bets are, but it's very accurate. And right now, we can see for January 28th, we can come up here and look. Right now, we're looking at 0% chance of rate cuts, guys. 98% chance of no change. Literally. I would not even try to even think about rate cuts, but I will say this. If they did cut rates that day, guys, full send. Market would full send because it's not been priced in. That's the biggest thing about macro events, guys, where you have to understand is these events get priced in well before they happen. And this is why they call it buy the rumor, sell the news, because these bullish events, especially if like retail and people know for sure it's going to happen, it gets priced in prior. And then when the event happens, the market actually dumps. And it's, again, buy the rumor and sell the news. So we do have a little bit of, I wouldn't say worry, but there's definitely, I want to see us reclaim some of these levels, guys. Just a couple weeks ago, we had quite a bit of bullish momentum, and then Trump comes out with the whole Greenland thing. Even though we're starting to work past that, and we've gotten some type of settlement where they're basically removing the tariffs and stuff, I think the market is still kind of like, there's a couple of things I think is occurring that is kind of causing a little bit of a problem for the market. One, quantum computing. I think that this is a threat that until it's 100% some type of way to ensure quantum computing cannot destroy cryptos, specifically things like Bitcoin, until these things become quantum resistant, there's a lot of threat for especially institutions. And like, for example, guys, you have a lot of institutions that are investing their clients' money for very long periods of time. They're not looking in 6 months. They're not looking at next year. They're looking in 15, 20, 25 years from now when their clients are retiring and they want to access these funds. Do they want to put them inside of something in 20 years from now? Quantum computing will be a real threat in 20 years from now. It might not be a threat today. It might not be a threat tomorrow. But in the next course of the coming years, as things kind of line up, it will become a bigger threat. So right now we're seeing a lot of these institutions, actually, some of them are not telling their clients to actually allot until they decide or figure out a way to be able to counterbalance or counteract this quantum computing threat. Next is the FOMC. We tend to, again, de-risk into it. I think that markets were already kind of de-risked. So if you're a market participant and you had already panic sold your bags and now you're thinking about getting back in, but then you know the FOMC's next week, it might make you hesitate a little bit until after that date to see what happens, especially if, they think that typically we de-risk into them, there could be a better opportunity to buy a little bit lower, all right? Then you have some market participants like, oh, we do have the FOMC, let me go ahead and sell and see if I can buy the dip. You get people that do these type of things, guys, and this is the different dynamics from the market you have to understand. Regardless, I think once we get past January to me was always going to be a very transitionary kind of a month, guys. We're coming off the back of December. We've had a lot of macro FUD events coming from basically from October into then. We're just kind of moving past these events. So we expected January not to be a horrible month, but a transitionary month. And what that means is transitioning from like this accumulation range into an uptrend, all right? And that's essentially what we started to see. We started to see the transition from the downtrend from the accumulation into the uptrend. Now we just need to confirm it, because what we don't want is, yes, this was a transition, but like Marty Party says, that we do a spring and then that spring breaks us, we come way further outside of this trading range. Not saying we come quite that low, but we somewhere down towards these local lows where we did the bounce last time where we did our spring, and then from there we bounce and then start making the actual move up, all right? That would make a lot of sense too because of the whole Wyckoff. Now, I know a lot of people don't want to see that because most alts are already at critically low ranges, guys. Like a lot of these alts are at range lows that they haven't been at in years. Seriously, if you look at a lot of altcoin charts, honestly, they don't look like they just got done going through a bull run. They look like they're coming off the back of a bear market, a year-long bear market. 2025 was literally a year-long bear market for a lot of coins, guys. Like a lot of coins that had a lot of momentum the prior year. Pretty much like, I'll give you an example of a token I like a lot that lost a lot of momentum, Sonic. Sonic was at $1.40 at one point in the end of 2024, guys. It's at 7 cents right now. This thing has been obliterated by these market conditions. And what we're looking at right now, and just kind of like looking at charts like this, where these things started coming down and now they're making these ranges. So instead of going straight down, they're now essentially just chopping sideways, which is what you want to look for in an accumulation range. Then you start looking for the characteristics, like the springs and the different things to kind of get an idea of what part or what phase of the Wyckoff accumulation are we in. And then this is when you can start setting up limit orders, because then it gives you unique buying opportunities, guys. Because the ROI for range lows in an accumulation leaving, and then this is why you have to combine all of these things together, guys. And this is why I tell people all the time, you can't just focus on one thing in this market, because you're going to completely miss something else that's greatly affecting it, all right? So with that being said, guys, we did see the NASDAQ and all that. These things look, pretty decent right now. We're well above, it seemed like it came up into this resistance zone. You can see NASDAQ kind of, rejected a little bit off of it. Same thing for S&P 500. You got futures. All of these are back above the 50-day. They look pretty decent. Looking at Bitcoin dominance, guys, we were talking about this the other day. Made a little bit of a move higher, but again, it's only got one day. Tomorrow, Sunday, this thing closes under. Hopefully next week we start to get some relief in the market, especially moving out of this FOMC, all right? Then we'll obviously USDT dominance, guys. It's been at this crucial level, guys. I really don't like it being up here, but it looks like it looks like almost like it wants to roll over. It kind of does. We've talked about this multiple times. It's a major area of rejection. Start to see some relief. There is also the chance that this thing maybe kind of like drifts up just a little bit higher through the next couple of days because of the FOMC de-risking, if they, people de-risk into it, and then finally see that drop going in or out of the FOMC, all right? Two things are happening this week that we have to be cognitive of. First is the FOMC, but then also going out of a month, going into the next month, historically speaking, the first few days of a new month are usually not the greatest, guys. You usually see a de-risking going into it. There's a multitude of reasons. One, futures. Some people have options that close. There's just a lot of things that happen transitioning into a new month. But then February, I'm hoping, especially moving past a lot of this macro FUD events, we should start gearing up for some momentum because, guys, there's an obvious catch-up trade that needs to happen. An obvious catch-up trade. Like, this is gold, all right? And we've never even really seen extensions like this on gold and silver yet, guys. This has been an extremely good year for precious metals, and I want to see that capital rotate into risk-on assets. The Russell 2000, guys, is like literally at all-time highs. So if you come over here and look at the Russell, You can see it right here, Russell 2000. Oh, let me remove some of this stuff, guys. And the reason why the Russell is so important, guys, and why people watch it is because the Russell 2000 is kind of like the meme coins of the stock market. You know what I mean? They're like all of your really, really, really low risk stocks, all of the stocks that are like really, really low cap. And when this thing breaks into new all-time highs, guys, typically, this is what you see right before risk on assets really get a chance to catch a bid, guys. All right, this is literally the picture that you see. You get precious metals goes first, commodities, all of these things go. Russell 2000, which is like your risk on appetite for the stock market, runs, and then boom, crypto and risk on assets run afterwards. I think, again, I'm gearing up probability standpoint, looking at all of the things, more so even too with the ISM. All of these things are gearing up that we should get an expansion of the ISM over 50. And next year should be the bull run for crypto, and that's when this momentum and the catch-up trade should happen. With that being said, guys, and again, this kind of goes back to how you can't just focus in on one part of the market. Like, you can't just be a technical analysis guy and completely ignore macro. You can't just focus on projects and fundamentals, because then if you don't know nothing about technical analysis, you're never going to know when to get your entries. And if the macro setting isn't lining up for it, it's not going to be a smart investment anyway. So you kind of have to combine these three things together. And if this is something you're trying to learn at a deep level, technical analysis, fundamentals, macro, if you want a place to network with people, if you want a place to get a coach and mentored in digital assets, business development, entrepreneurship, click the link below, guys. We'll see you inside.